Welcome back. Let's talk further about markets in 2025, including our next guest stock picks, or some of them anyway. Joining me from Winnipeg is Grant White. He's portfolio manager and investment advisor at IA Private Wealth. Grant, thanks a lot for joining us. Where do you come down on the questions that are on investors' minds as the new year gets going on elevated PE multiples in certainly in U.S. Stock markets, the ongoing love affair of investors for that small group of mega cap tech stocks, and the earnings growth that's necessary to sustain these multiples?
Yeah, I mean, we've gone on a really nice run here. I mean, it's been a couple good years, especially coming out of 2022. And so to your point, I mean, markets are at near all-time highs. We're a bit off of them, but the PEs are certainly looking a little bit high, obviously. So where this leaves us, and I think where investors need to be really mindful, is that we are likely to see some pullbacks. We're likely to see short-term volatility in these markets, and I think investors need to be really prepared for that and really need to be looking for other opportunities than what we've seen over the last couple of years. I've kind of gone on record around here saying that lazy investors are going to get punished in 2025, and I think that's going to be the case. I think that if you're continuing to follow yesterday's trends, you're going to get punished in 2025, because I don't think that we're going to see that same type of leadership this year going forward.
That's interesting. What type of, specifically, what kind of trends are you pointing to? Drifting towards the Mag 7s, is that a big one?
Yeah, exactly. I mean, I think it's been really easy for people to pile money into NVIDIA and Apple and Microsoft. And don't get me wrong, these are fantastic companies. And I'm not saying that they're going to do poorly this year. I just don't think that we're going to see the same types of gains that we've seen over the last couple of years. And it's been really easy to get large returns, especially in U.S. markets, as you pointed out, Paul, over the last couple of years. I don't think that's going to be the case this year. So if you're going to be a little bit lazy on your stock picking this year, I think that you might get caught up in a bit of a storm, and especially as volatility creeps in. I do think that we're likely to see a bigger correction in the U.S. this year, but I don't think that necessarily means we're going to have a bad year. I just think that that's going to be a healthy thing. I think that it's likely we're going to see a 10 to 15% pullback at some point, and I could see that relatively soon in these markets.
Okay, you've got four stocks that you like. None of them is a mega cap tech stock. Let's go to the first one, Royal Bank of Canada, the top performing bank stock by a long margin, I think, in 2024.
Yeah, so this is probably my most boring pick right now, but I still think RBC is a great company and really well positioned. If you're a Canadian bank investor, we really like Royal because of their U.S. exposure, and I do think that we're going to see, especially related with changing policies, we're going to see an uptick in profitability in the U.S. We're going to see an uptick in M&A action in the U.S., and I like a Canadian bank that has exposure to that. So for me, Royal is really well positioned here. I don't think that you're going to see huge gains out of Royal. I mean, our predictions for a few percent on share price, and of course we get a decent dividend off of Royal as well, but this is a really strong core holding, and with the volatility that we're expecting to see, I like having good strong core positions that are of high quality, and Royal fits that bill. Okay,
and I think a lot of people would say JP Morgan Chase has a similar profile. A lot of people call this the flagship U.S. financial, and that's one of your picks as well.
Yeah, I mean, for a lot of the same reasons I like Royal. I mean, JP Morgan obviously is just more of a pure play into this exact same story. And again, I do think that we're going to see turmoil. So when it comes to that, I like to have my core holdings in the highest of quality. And there is no higher quality in the world in banking than JP Morgan. I think that they're really well positioned right now for that M&A opportunities. I mean, again, they're the biggest player on the block on that. And so I think that JP Morgan is going to put up some really nice numbers if that does come to fruition, which I think it will. And likewise, with any sort of volatility that we might see in the U.S., especially, or any challenges we might see economically there, JP Morgan is the best position to weather those storms.
Okay, crude oil has a nice rally going today. We can perhaps take a look at WTI. It's above $73 per barrel. Hasn't been there for a while. 73.34 is what I've got. So 73.40 is on our screen, up more than 2% today. Investors who are long the sector will hope that the gain can stick. It certainly has not over the past several months. You like Canadian natural resources. Again, many would call this the flagship of the Canadian oil and gas sector, or certainly one of them.
Yeah, it's a bit of a theme here because again, I'm gearing more towards quality, and again, with Canadian energy, Canadian natural resources is the cream of the crop in my opinion, and so we love this company. I think it's been well positioned for a long time. We liked it at lower energy prices. We're going to love it a lot more at higher energy prices, and we do think that we are going to see that demand normalizing this year across the world. We also see positive momentum in terms of policy from the United States, energy policy in particular, and I think that's going to play out well for CNQ. So all things are playing quite well into CNQ's favor, in our opinion. At the same time, we really like the company where it is today. With a more favorable tailwind at their backs, we actually see that there's opportunities for pretty decent growth for this company in the next year or two. We're targeting it might climb up as much as 50 to 65% in terms of share price, depending on the perfect scenarios and how perfect they are.
Okay, we'll step to another sector now, the entertainment sector. Walt Disney is your fourth pick.
So AI is on everybody's minds, and I'm shifting gears away from just the pure play AI to who's going to be taking advantage of AI. I think the greatest innovation in AI is actually going to be related to human experience and how we actually take AI and change human experience. And I think that there's a company like Walt Disney is probably one of the best positioned in the world to do that. I mean, they're already actively doing this. I think that they're going to be able to improve their service offering, their experience offering throughout their properties, throughout their entire experience. And I think Disney is well positioned on that. I like Disney right now because I do think we're also going to see a normalization in terms of travel trends. I can see their cruise ship business picking up. I can see that they're getting better again at their parks. They've had some issues over the last few years, but I think Bob Iger has them back on track there. So I think parks are going to be interesting. But it's a really well diversified company across entertainment and experience, and I think that we're going to see some nice lift there. But again, I'm focusing on a theme that's beyond the traditional AI here, and I think that that's going to play well over the next few years.
Grant, thank you so much for your time. Grant White is portfolio manager